do another one. And I'm going to go over what trade we took and how we took it, how we did it, how you could have done it, ultimately getting you to a profitable state regarding trading. So listen up, lock in, and join the Discord because it's completely free and you get to see all of my trades. Don't mind the background noise, I'm just in the lobby. Daily time frame gold is clearly bullish. You can see the break of structure and you can also see price coming back and then looking to expand, right? So once we kind of know that, obviously we should be careful with gold. However, there's something that I noticed which kind of just made me take the trade even faster, but I guess shouldn't have, maybe should have. We'll go over it. We get a 4-hour break of structure here. So once we see this 4-hour break of structure, we start to say, okay, we're going to break structure down, yes or no. So in this case, we actually did break structure down, right? And at that point, we're saying, okay, we do know that the daily wants to expand. However, we don't know that for sure yet because the 4 hours not flipping structure and continuing off of it. So with that being said, we need to get a hourly invalidation of the 4-hour structure. And that means we've already used up one of our invalidations for us to be able to take the trade. If we use more than that, pretty much is a low probability trade. So what do we have here? Hourly structure is bullish. More importantly, what do I also see? I see that hourly structure has been pricing efficiently, meaning going up, down, up, down, up, down relatively fast. Meaning there are no failed orders, no big fair value gaps that price can target to come back. Okay? So hourly was bullish coming into New York at 8 a.m. Then what do we have here? We have the 15-minute. There is this fair value gap here, but other than that, everything has been priced efficiently. So this is the next big fair value gap that we have, and that's what I use as a target. So there are two fair value gaps to target. One of them was already targeted, and this was the big one on the 15th, and then there was this one right here. So when I looked at this, I just thought that this was a low probability setup and price would not make it here. So with that being said, I look at this and we, in short, get a retrace into here at market open. And what I like to see is, well, 5-minute structure being bullish, which I kind of shouldn't have to go over, but listen, all the time frame need to align. Daily time frame was just proven bullish. The 4 hours bearish, however, the hourly is bullish, so we're still okay. Even though it's not high probability, it's pretty decent to have one invalidation, as long as it's not significantly more than that. So you have the hourly, you have the daily, you have the 4-hour time, 15 minutes, okay, and now we're looking at the 5-minute, which also happens to be what? Bullish. So up liquidity expanded, retraced, now we're looking for an expansion. Okay. So with that being said, we see this 5-minute structure here, and we see this 5-minute gap, plus this 15-minute overall gap here. And what does price do when market opens? Price goes ahead and does a nice liquidity sweep. We see this. We see a mitigation into the fair value gap, right? After that, we see a liquidity sweep, and then we see a break of structure. So when I see all of this here, I'm already very bullish. Now, when price comes in, we didn't get that push without getting a break of structure. We got an internal break, so I had to wait for another break of structure. So when that happened, I was pretty much good to go. I see price come in, I see the retrace. Once I see this retrace and I see price start to expand, I know that this fair value gap has yet to be targeted. So I kind of had that as like our support area per se. And yeah, we targeted highs and ultimately we got stopped out. Now, the only lesson from here that I would say is we don't execute from premium areas of price in general. But other than that, everything was pretty sound. Sometimes it just doesn't go in your direction. And that's part of the strategy itself. Okay, so the trade that you should have took, however, which I'll go over briefly, is this one. So if you could take two trades in the day, 15-minute does break here. Okay, 15-minute breaks right at market opening. So we, having traded that, we still have to wait, right, to enter because the 5-minute broke. And we would need a clean structure to enter, which literally does not happen up until here. So this is where that break of structure was confirmed. Look at this break, boom, here it broke. Now we start to look for an entry, okay? Because everywhere else, and I'll go over this just now, there was literally 0 valid entries. Why? You see fair value gap gets made, price comes in, invalidates it, boom. Not good enough. Price gets paid, we get fair value gaps, invalidates it, no entry. Same thing, no entry, same thing. All the way up until we get the 5-minute flip. Because if we get a 5-minute flip and the fair value gaps have yet to be validated, we still have a really good chance of continuing because of 5-minute flip structure. But off 1-minute structure, unless you see everything start to get respected, it's very low confidence for price to actually expand. So we get the break here, and guess what? Does price have any reason to come back here? No, because it filled every single fair value gap, every order block, at which point you would execute here and have this massive trade.